Hello and welcome to the Smart Money, Dumb Money Show. And I'm your host, Keith Richards. I'm President and Portfolio Manager at Value Trend Wealth Management. And today we're going to address a question that I actually got from a student. I lecture regularly at the local college and universities here in Ontario. And one of the students asked me, after hearing a presentation on basic technical analysis, and we kind of looked at how stocks can go up, go down, and consolidate. And so one of my favorite ways of buying stocks, as I was explaining to the class via a Zoom presentation just like this, was I like finding stocks that have declined and based and are beginning to look like they're breaking out. And that's really an ideal way to catch a value proposition where the stock is not overbought or overvalued. And if the company has a catalyst, a reason for going up from that terrible situation it was in before when it was declining, then we want to see if we can buy into that reason and see if it can recover. And some of these stocks that we've done this summer in the value space, a number of the utilities, oil and gas, minerals, mining, we've done very well on these stocks, and it's because of that pattern. Sometimes the market oversells things. You can tell when the selling's over when it consolidates. So the student asked, well, what about the airline industry as a reopening value type of proposition? So I'm going to bring you right into some charts right now, and hopefully it might answer the question that this student asked, as well as maybe some thoughts for yourselves. So let's get started. I'm going to bring up our own Canadian Air Canada. Now, again, if we go back to the way I look at things, it's always kind of a phase way of looking at the market. So the market's in a downtrend, it consolidates, it breaks out, and it goes into an uptrend. It consolidates in a topping formation, it breaks down and carries on with that pattern. So recently, with the COVID correction and in particular the pressure on the airline industry because of travel restrictions and lack of willingness of customers to actually get in the airplanes, the industry has really been bleeding a lot. And it crashed hard and it didn't recover like many other sectors recovered over the summer. This is one sector that has not recovered. It went into a pretty nice base, basically over most of 2020, and began to break out. But recent news of some of the shutdowns and viruses over the recent winter months caused the sector to pull back, and Air Canada was not immune to that pullback. But what's interesting is that if we look at Air Canada, its declining lows, its lows are actually not making lower lows. They're actually fairly stable. As you can see, these are lining up more or less. And the highs are kind of formed a little bit of a triangle where they broke out. And this may be a test of that triangle. If I were to draw the trend lines, you can probably imagine that. So I want to keep something in mind when we look at airlines, and that is that there is a certain amount of fundamental risk here. They're bleeding. They may need second tier bailouts. Most of these companies, especially in the States, have received bailouts. I don't think Canadian companies have yet, but they'll be needing some bailouts if they even want to exist. So there's a real risk there. My feelings are they'll probably get those bailouts. Second thing is that everybody's counting on the vaccine, and I do too, with a lot of the stocks that we've been buying, including the banks and the oils and whatnot that I've talked about kind of nonstop over the past 6 months. But the other thing that we got to keep in mind is if these vaccines are slower to come out, then the airline industry is particularly sensitive to that, because it's the one area that everybody's got to bunch together in a great big bus and go through the air and breathe everybody's air, right? The other thing is that if people are still hesitant, despite the vaccines, despite some emergence into a normalized life, perhaps the airline passenger traffic will be lower as people are hesitant to travel. So you got to keep that in mind. So we, to imagine that we'll go back to the highs of 2020 might be a bit aggressive. My question is, could they get somewhere near that and perhaps into, this area of resistance, which would be in the low 30s, and that's not a bad trade from the low 20s. So I'm going to take a look at a couple other ones. This is American Airlines, the big guys in the States. And you can see the same sort of pattern, a pretty healthy downtrend to begin with, and then a crash, whereas Air Canada was moving up prior to that, but a consolidation, and it's starting to recover. If this stock can break, $18, which seems to be a bit of resistance right now, my target might be, low to mid 20s, possibly as high as $30. So that's a pretty good upside. Again, it's a contrarian play, to be sure. So there are risks, but there's potential rewards. Now this is JetBlue. JetBlue has actually recovered. You'll notice the pattern on this is far more constructive than the last two we looked at. It's literally back into its old zone of resistance. The opportunity may not be quite as high with JetBlue. It probably has a possibility of getting to the upper end of that zone, which is in the $20 area. It's already trading near 17. Still pretty good, but I'm thinking that maybe if I was going to be a contrarian and play this sector, I'd look at the ones with the greatest opportunity. And one of the ones, in addition to the first two we just talked about, that maybe has the greatest opportunity. In fact, I probably, if you held a gun to my head, this would say it would be this one, and perhaps Air Canada would be my two favorite charts, is United. And you can see, a pretty nice trend there. Like, it's actually a nice trend line. So my thoughts are that if this manages to break, $50, heck, really aggressive investors could try to buy on a $45 breakout. We might see, anywhere between 60 and as high as the high 70s as a recovery. Now, there's a lot of ifs there. As I said, the passengers may not come back, and these guys probably need bailouts. So there's no certainty that this is going to be a good trade. It's probably best that these kind of stocks are looked at as aggressive, risky plays. And in fact, at Value Trend, we have an aggressive growth strategy that is different from our conservative strategy. And if we end up buying the airlines, we haven't bought any yet, but I'm strongly considering them. If we end up buying the airlines, we will only put them in our aggressive strategy. This is not for the conservative investor, because you could lose money if these guys don't get the bailout, or if people don't get back on planes. Well, thanks for listening. That's enough of today's show, and I will be back in a week. And I just wanted to mention that this kind of idea are the types of ideas that we at Value Trend are constantly exploring. And if you take a look at our performance, you'll notice in the aggressive platform, for example, we've had pretty good performance in the past number of months because of this kind of trading we've been doing. And our equity platform is a very consistent platform. So if you like the idea of sector rotation, of value type investing with a real strong bias towards technicals, then we're your people. We're also, by the way, very, very good in bear markets. Our strategy tends to work well in choppy down or sideways markets. We're not indexers, and we're not afraid to hold cash. So thanks for listening, and I hope you have very successful trading in your coming days.